In this video, I'm going to be talking about what might happen to mortgage rates in the UK and the Bank of England base rate in particular. Now, before I start, if you find any of this video interesting, then please make sure you hit that like button and you subscribe to our channel. I do update this every month, but there is an article that relates to this particular video that is on the Money to the Masses website, which you can find a link to in the notes of this video, and that is continually updated with the latest market predictions of where the base rate is going to go and therefore mortgage rates. So the Bank of England increased the base rate in December 2022 by 0.5%, taking it to 3.5%. That's the highest level in 14 years. And it was also the 9th consecutive increase by the Bank of England, which is unprecedented. Now, what does that mean for mortgage borrowers? Well, if you're on a fixed rate mortgage, then your mortgage repayments each month will stay exactly the same. But if you're on a variable rate mortgage or a tracker mortgage, then you're likely to see your mortgage rate go up by a similar amount, so 0.5%. So what does that mean for your repayments? Well, for every £100,000 that you've borrowed in a mortgage, then you're likely to see your mortgage repayment go up by about £25 a month. So if you do the numbers, if you've got a £200,000 mortgage, then that means that you're likely to see your repayments go up by £50 a month. So that's the latest rate rise. What about the future? What's going to happen to the base rate going forward? And are interest rates going to keep going up? Well, much depends on the economy and in particular inflation. If inflation proves sticky, then the Bank of England is likely to continue to keep raising the base rate, and therefore mortgage rates will follow in turn. UK inflation at the moment sits at 10.7%, which is down slightly from the previous month, which was at 11.1%. And that was a 41-year high. Now, the good news is that hopefully that shows early signs that inflation may have peaked. In fact, the Bank of England previously predicted that inflation would peak at around 10.9% by the end of this year. Okay, they were wrong, but we are close to that and we just started to go under that. So hopefully the peak is in. That would be good news for future interest rate rises, of course, makes them less likely. So where are rates likely to go in the future? Well, if we look at what the market is predicting, now these predictions are often wrong and they do change quite a bit. At the moment, they're predicting that the Bank of England base rate will hit 4% in the early part of 2023 and then 4.6% by July 2023. That means that the best buy 2-year fixed rate mortgages are likely to be about 1% above that. So it's maybe somewhere near 5.6%. So we are likely to see more rate rises, but if inflation starts to come down, then it may limit the number that we have in the future, but a lot is still up in the air. Obviously, these predictions are subject to change, and we update them regularly in the article in the notes of this video. But just to give you some steer of the direction of travel, a month ago, the market was predicting that the base rate would be at 3.6% in 5 years' time. That has since dropped to 3.1%. So you can see there is a definite coming in of interest rate predictions. People are predicting they're not going to be quite as high. As for 2023, last month, the market was predicting we were going to get 4.8% by the summer of 2023. And of course, as I've already said, that's coming to 4.6%. We're seeing some of the best buy mortgage rates. So if you look at the best buy mortgage tables on the Money to the Masses website, you will see that they've started to come in a bit, but they are still much more or much higher than they were than the summer, obviously, as a result of some of that carnage we saw in the mini budget. So there is some good news in there for people who are going to be fixing their mortgage maybe at the end of next year, that rates might be coming in a little bit, or the expectations of rate rises might be coming in a little bit. So if you are coming to the end of your mortgage deal, whether it be a fixed rate mortgage deal or it could be a tracker, for example, then you may be looking at what to do next. Now, a lot of deals will be disappearing as more interest rate rises occur from the Bank of England. But one thing that you could do is you could look to fix your rate now if you are within 6 months of, say, your fixed rate mortgage ending. Speak to a mortgage broker. They can look out there and give you the best options for you. It could be a tracker, but they'll look at the best fixed rates for you. Therefore, you can lock in to a new deal that will start when your existing deal ends. That avoids any of those early repayment charges on your existing deal if you are in a fixed rate deal. So make sure that you speak to a mortgage advisor. If you don't have one that you can trust, then you can find a link in the notes below on this video. That same article takes you through and tells you how you can find a mortgage advisor that you can trust, and you can get a free mortgage review. So make sure you subscribe to this channel for future updates on where interest rates might go and therefore mortgage rates. And please make sure you like and you share this video.